Our today's topic is intersectoral flow. As we know, in our economy we have four sectors: household sector, producer sector, government sector and external sector. But while we are discussing about intersectoral flow, we are not going to discuss external sector. In the case of intersectoral flow, we are left with three sectors: household, producer and government. Now all these sectors are interdependent. Now we will discuss how these sectors are interdependent. Like household sector is depend upon producer sector for supply of goods and services. Now why producer sector supply goods and services to household sector? For consumption, as all of us have basic needs and all that needs are fulfilled by the goods and services and that are provided by the producer sector. Secondly, now producer sector is depend upon household sector. How? As producer sector, when they produce goods, they need factors of production. As we all know, we have 5 factors of production, and the owner of these 5 factors of production is household sector. And all these factors of production are provided by household sector, and so in this case producer sector is depend upon household sector. Now third one, government sector. Government sector is also depend upon household and producer sector, as both these sector provide tax and non-tax revenue, or we can say income, to the government. Now fourth thing, these two sectors are also depend upon government sector in the case of like administrative services, any law, any order, any rules, any regulation, that all are provided by government, and producer and household sectors are depend upon government sector. So in these case, these three sectors are interdependent in the case of goods also and services also. If we are discuss about intersectoral interdependence, that leads to intersectoral flow, means these three sectors are going to exchange each and everything with each other, so the flow is there. But this flow is not of a one type. There is a two type of a flow. One we called real flow, second one is money flow. The real flow is when the supply or exchange of goods and services in the economy. So when goods are exchanging through all these sectors, then that flow is known as real flow. But when the supply of money is exist during the intersectoral flow, that is known as money flow. Let's discuss with concept with diagram. Like as we know, household sector provide factors of production to producer sector, and by using these factors of production, producer sector produce goods, and these goods are consumed by household sector. So in this case, household sector is depend upon producer sector and producer sector is depend upon household sector. This is known as real flow. Here we are not discuss anything about money. Here we are going to discuss only goods and the things. Now second thing, household sector provide factors of production to producer sector, and by return what thing is received by a household sector? Like they are providing something to the producer sector. In return they are getting payment in the form of, if household sector provide land, then they received payment in the form of rent. Second example, if household sector provide labor, Then producer sector pay wages and salaries to the household sector. Now, second case, producer sector provide goods to household sector. This is a real flow, but here while they are buying the goods, they also spend their money to these things. That is the expenditure, and that is received by producer sector. In this case, the money flow is there. Here we are not discuss about anything of goods and services or factors of production. Here we discuss the payment. In this case, payment is given by producer to household. In this case, expenditure is done by household and that is received by the producer sector. So this is all about our real flow and money flow, and both these things are opposites. Like household provide factors of production to producer, and household received payment of these services from producer. Here household sector buy goods from producer sector. Here household sector provide do expenditure on goods, and that is received by the producer sector. Our next topic is circular flow of income. As it is clear from the heading that circular means this definition would be in circle. Flow of income means there is a rotation of income or moving around of income. In our economy, three activities are never going to be ending. And what type of activities are there? First one is production of goods and services, because consumer demand goods and services like all of us. Our requirements, our desire, our wants never ending. Second activities is generation of income. Generation of income is in the form of wages, profit, rent. Like if the production of goods and services will exist, then how it is produced? It will produce by the help of factors of production, and by using the factor of production they also give income to the owner of factor of production, and they generate the income. Third activities, that is expenditure. In our economy, we do investment or expenditure in two forms. One expenditure is consumption expenditure, and second expenditure is in the form of investment expenditure. We discuss both these concepts in our later videos. Now, can you identify from these three activities which one is the first activity that we have to perform? No, it is not an easy task to finalize, to find out which one is our first activities. These activities are in the form of a flow. So that's why it is known as a circular flow of income, because we are never find out that how we produce goods and services, and when we generate income, and how we spend our money in the form of expenditure. For these we need income. We are also generate income here, and they are produce goods and services. Which one is the first one? Never finalize. So the definition of circular flow of income is it refers to the unending flow of production, generation and expenditure of the goods and services in our economy of different sectors. This is the definition of circular flow of income, and we will discuss this concept in the circular form. Now discuss circular flow of income in three phases. The first phase is phase of production. Means in this phase value will be added in the product. How? Production of goods and services will be produced by help of factors of production, and factors of production are in the form of land, labor, capital, raw material. When I am buying or purchasing 5,000 goods of raw material from any supplier, and by adding 1,000 additional value on this, by produce the good from that raw material, and the final amount, the cost of that product will be 6,000. Like we can take here example of a wood. The cost of wood is 5,000, and by producing chair I am going to add value of 1,000, as I am using Fevicol also, nails also, and labor also use their machineries. All I am also using the machinery. So the cost of the chair is 6,000. So this phase of production will be the phase of value added, by using the factors of production that I am going to buy from household sector. Now this is the phase of a production. Now second phase is phase of income, means this is known as the generation of income. Now how income is generated? As I am discussed here, the factors of production will be provided by household sector, and in the return they get factor services, or we can say factor payment, and that payment is in the form of rent also, wages, profit, and this phase is a phase of income generation. Now the half circle is completed, as they produce goods and services by using the factors of production, and they provide income to the household, then that is the generation of income. Now third phase is the phase of expenditure. Now who spend money? Means who consume goods, whether it is a consumption expenditure and whether it is a investment expenditure. Both of these expenditure are done by consumer or household. In this case, who receive the payment? Owner of factor of production. And who is the owner of factor of production? Household or a consumer. They receive the money in the form of a rent, wages, profit, and with this income they buy goods and services that is produced by the producer in the first stage. While they are spending the money, who receive that money? That money is received by producer, and the circle is never going to be end. This circle is in the rotation. Let's take one example. Here this sector, in this phase, they produce furniture by using the raw material wood, and that raw material is provided by consumer. In return they give amount of raw material to the household sector. Now household sector, that person is also going to buy furniture. From where they buy the furniture? They also visit to the same producer to buy the things. When they buy the furniture, they spend same money in that organization, and that money that they give to the household by in return to buy the wood, that money is received back by producer in form of to sell the furniture to the same consumer. In this case, this is the circular flow of income. In our economy, our income is moving around the household to producer and producer to household, because in same case producer might be the consumer also. Let's sum up the circular flow of income. As household provide factor of production to producer, producer sell goods and services to household. In the return, producer give factor payment to household, and household spend money on goods and services, and that money will be received by producer. But in the circular flow of income, we have to follow certain assumptions. Like our first assumption is that in this flow of income, we will consider only two sectors. One is producer, second one is a household. Second assumption, we will spend all income to buy goods and services. Means we are not going to save our money. Like if we earn 1000 income, then we consume 1000 income also. Zero savings will be there. Third assumption is our economy is a closed economy. Like in our economy, we have two type of economy. One is open economy, second one is a closed economy. Our three sectors: producer sector, household sector and government sector. If we are discussing about these three sectors, then that economy is a closed economy. But adding to these sectors, if we are going to discuss about external sector also, means four sectors are there, then that economy will be known as open economy. Means now we are dealing with the outer the country, not within the country. If we are dealing within the country, that is known as closed economy. But if we are dealing outside the country along with these three sectors, that economy is known as open economy. In circular flow of economy income, we will assume closed economy and no government sector is there. Second last topic is triple identity. Means in the circular flow of income, we include three things. So that is why it is known as triple identity. How? All our factor payment is equal to value addition. Means while we are producing the good, whatever extra amount we added to that product, that is equal to our factor payment. Second identity is whatever we produced in our economy, that all are equal to our total expenditure. Means if the producer produced 1000 goods, then the consumer will buy 1000 goods. Third thing, that is if the value addition equal to income generation, means whatever the value we add, that is equal to our income, and whatever the income we are earned, that is our expenditure. Means no stock left, no savings will be in this economy. So this is known as our triple identity economy. Last topic is significance of circular flow of income. Means from that model means circular flow of income model, what we can observe and what we can find out from this model. First observation, first important for us is that there is a easy to estimation of national income, as national income is the sum total of factor income. And in circular flow of income, we are going to discuss about our factor production, factor income, factor payment. So it is easy to find out that how much money we consume and how much income we earn from these type of services, and also from which sector. Second observation we have, that is we can get the knowledge of intersectoral dependence. Means which sector, like household sector, how much dependent upon producer sector, and second we can say how much producer and household sector is depend upon government sector to buy goods and services, and for supplying of goods and services, order, law, defense from the government side also. So this is all about circular flow of income.